Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Minute for Monday, September 13, 2021. We hope you had a great weekend. I want to talk to you a little bit today about the market activity this week. A couple things we're going to be looking for. Brush up again on our little bit seasonality and some of the trends we're seeing there, as well as give you a quick sentiment check, a little mood check on the market, see where we sit as we're about halfway through September at this point. So we're nearing the end of the third quarter. The markets have been very uninspiring recently as far as the market activity. Really haven't gone anywhere, but there has been a big increase in volatility. And if you've been watching the market closely, you'll notice a repeating pattern where it's higher in the morning and sells off through the course of the day, right? We get that green open, it looks like it's going to be a good day, and then the market tends to fall under the weight of itself as selling picks up and the market finishes lower. And I want to talk about that because with where we are in the calendar right now in terms of seasonality, we've talked about it a lot. August and September, particularly first half of September, not great times to invest. And the reality is everybody knows this at this point. All the investors, both retail and institutional, are fully aware of the lack of positive seasonal trends in the first half of September. So that's why you're seeing a lot of really wishy-washiness in the market, where the market appears to have no conviction. We're not concerned by this. We think this is okay. This is a very nervous market. You can really just feel it in the tape. And the more you watch and talk to people and you see some of the financial news media covering it, as well as the sentiment of the market, is very negative, right? We've had 2 weak unemployment reports in a row. We've seen reports indicating inflation is moving up. So there's a lot of concern about what's to come. We continue to believe, we're very optimistic on this market. We think once we work through this seasonal stretch here, which just always for one reason or another tends to not be very good, that the markets have a much better backdrop coming out of this, where sentiment will be down. We know the Fed is on the sideline for the rest of this year, and it really is going to give the markets some room to run here to the upside. Plus, fourth quarter seasonality is good. So we're coming from a bad seasonal period at the end of the third quarter into a much stronger seasonal period as we begin the fourth quarter. Quick checkup on investor sentiment as gauged by the Fear and Greed Index. All it took was a couple days moving lower. We're only still a couple percentage points away from all-time highs, and this index is back in fear territory at 34. And again, folks, this is not how crashes begin, where everybody is anticipating it and everybody is ready for it. We think as contrarian investors, this could be how you see a large, broad rally begin, a powerful rally where you have a lot of investors 1 foot out of the water. The market starts to firm up and move higher, and people will chase this market trying to get back in and get invested. We still see a lot of money sitting on the sidelines because of this neutral to negative investor sentiment. Tomorrow, being Tuesday, we will see a read on the consumer price index, which will give us a feel for where is inflation going. Is it continuing to pick up, or are we going to start to see some signs that things will moderate in the near term? So keep an eye on that. We would anticipate if that report comes in above economists' expectations, the market might not take it too well. And if that report comes in below expectations, the market should be pretty happy about that. That's all we have for today. We'll be back later this week, Friday, with the Heritage Market Pulse to wrap up this week's action. If you have any questions, feel free to reach out to us. We hope you have a great day.